The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. This very first trading day of June the 3rd. My pleasure to be here. And Monday through Friday, 11 o'clock until noon. And Eastern Time, of course, 877-927-6648. Start off with Steve Rhodes. Great 2 hours. I try my best here for the hour of 11 o'clock till noon. Great hour trading, technical trading of Larry Perseverance comes on at noon. Then you've got Daryl Martin also with his diagnostic trading hour. It's just a fabulous show as well. Dave White, who's the instructor and producer of the fabulous CD that's, well, it's not a CD, it's online. The Art of the Trade, the new program. That is a software program right here at TFN. And don't forget, I think there might still be a little residual time left for wrapping up the Tiger dollars. I know a number of people had told me last week they had been buying Tiger dollars and they were hoping to use it for my opening call. I do appreciate that. And just before I forget, I do want to thank some people from last week. I think I did last on Friday. I hope I did. Wayne was a great help. Thank you very much. And certainly, Omar, just great that you guys were there to help me out, just with equipment and plugging things in and all that stuff. So it was really a fabulous session. I had a number of people over the weekend say thank you. And I really enjoyed it. I just loved doing it. So that was that free webinar on Thursday in Newton, Massachusetts. Pretty little place. And, I mean, great town, but a pretty little venue. And, let's see, we've got Dave White. And then, of course, wrapping it up, 4 o'clock till 6, you got Tom O'Brien. And what more could you want for someone to wrap it up, give you his impressions of what's going on in the market? Then Tom O'Brien. So right here at TFNN, we've got the Dow up 61 at 50,176, up 0.40%. Now, that's really interesting. You got a couple of Dow stocks. Let's see if I can find them right here. Not there. Okay. IBM's up 97 cents, and CVX is up 66 cents. Boeing's up 82 cents. McDonald's up 70. Hey, this is really interesting. Walmart's up 77 cents. Oh, there it is. Merck. I knew there had to be some aberration here. Merck is up. I think they've got a favorable review from this weekend's talks that they had. It's at 49.10, up 2.40. We spent a little time on Merck the other day saying there is resistance here, so you can expect some consolidation, but looking out, it still looks like a fabulous stock. And so we've got the Dow trading right now at 15,171, up 55. You've got the S&P. I've got the S&P down $1.91 at 1630. You've got the Combat Index down 17 at 34.38. Now, this is really important. Gold is up 12. Now, I've spoken about this for a week. Maybe it's more than a week now. Let me just give you a little review. In my opening call, that's the daily service, that just an intensive service based on the Chapman Wave methodology that I send out every morning. Every morning. I really spend a great deal of time on the analysis based on all the techniques that I developed over the years. That included last week, you remember I spoke about Chapman Wave trend gauge. Even though the market was up huge, when you looked at it, the market actually had a slight dip right at the opening, even though the futures were up beforehand. It was just an incredible indicator that I developed. It's called the Chapman Wave trend gauge based on Richard Arm's trend index, and it's got a success rate well in the 90%. It's actually much higher than that. I think it's only missed maybe twice in the last year. So this particular index is really fabulous. It helps my subscribers to know beforehand, if they're looking for things, how the next day could turn out. So I have all these different techniques. Now, one of the things that I'm looking at here is that gold has that H pattern. It's called, we used to call it the dreaded H. I try to leave out the dreaded H now just because there are other implications about it. Although that's how the genesis of it is that the left side of the lowercase h got broken and it went down even deeper. So it was called dreaded because there were a lot of people long in a certain sector a long, long time ago, but talking about 9 years ago. And they learned that it could be a dreaded H if it kept going down when they were long. But actually, it's just the H pattern that can turn into an M pattern. We'll go into that in a little while. 877-927-6648 is the number to call. But in the meantime, let me just do this. I want to see that I've got everything in line. Yes. The pattern that is really important at this particular point is this arching over the left side, right side price time match. So in my opening call, what we've got 4 longs. 2 of the longs have got spectacular gains. The bits there, one has a half position left over, up, I think it's 60-something%, and the other one is up. It was up over 70%, but with a small position after we've taken a very big percentage gain earlier on, from $14.90 to 21 something. And within that context, we have 2 long stocks. One is really a cyclical that we have a small position in. But if there's going to be a rotational correction, then this is one of those that should participate on the upside. We have another one which is in its own cyclical morass because it was a totally neglected stock, but has become a very focused stock. And I know that. I know that even from the ads that are coming to me from the internet, they're becoming much more specific to me because it was just all online. And I said to myself, no, I go there personally sometimes. I want to see what's there. I want to be able to go right there and just go to my printout and just get whatever I want for the discounts. I think they're turning the corner. So this is part of what we're going for. Yep, we might get stopped out, but so far, out of all 8 positions, we have 1 is down about 12 cents or 13 cents. But most importantly, what I did do, and actually I shouldn't say I've never done it, I've hardly ever done it. We went 3 times short at the open on Friday. And that's something we don't often do, but it was only for subscribers who really understood what 3 times the percentages that can move really quickly in your favor, out of your favor. That was the only condition. Also, we are short the Dow from maybe 4 sessions ago, and at the same time we have a sector that I spent a lot of time discussing here that I think is just in real trouble right now. It has been one of the very best sectors, and I spent a lot of time for subscribers explaining why. So we have some positions in that, a double short. Fortunately, it's working out real well from the moment we started. We bought them. It's been working well. But this is one of the very best sectors. It means that fund managers, as soon as there's any kind of upside action, they're going to want to jump in. Because this is the habit is to keep going for the same things over and over until it stops working. So far, that hasn't worked over the last couple of days. So that's our situation. 4 shorts, some are actually very, very short positions, and 4 longs, 2 long-term longs, which I hope to keep. And I have, in fact, a stock that I want to go long that I know it's going to be pulling back. But we want to stage our positions in the long side. Why? Because I believe this is a cyclical that has really turned the corner. And I'm looking forward to the coming 3 to 4 months. So I want to be able to get small positions on the way down. That's the plan. So I just thought I'd go through that. I think it's very important that you at least know how we trade, what we're looking at, and why. More importantly, we're looking at, as I say, gold is up. Now it's up 16. Let me just show you what I'm looking at in gold. Here's the GLD. GLD. And I've discussed this a number of times. In fact, should I do that now? Let me just double check. 30. No, I'm going to wait. We've got leg B in the GLD. We have the equivalent of GLD, but it trades at 1/10 the price of the GLD. So you don't put up very, very much less money, and you get the same percentages, and that's fine with me. Now, what's really important about this is that in looking at the GLD, I would suspect that the H pattern, I haven't drawn it in as much as I drawn in the other one. This is what I was looking at. That, and then we're going to be seeing what happens. And all of this is just a mini pattern. You see that large arch? I'm starting off thinking small, but there's a much greater chance that if gold itself, which is trading at 1409.30, is able to, I'll go to the GLD and I'll go to gold itself. I just want you to draw this pattern right here. This is really the pattern, the H pattern. Remember my introducing the Chapman wave methodology? In fact, this, I had a number of people talk to me about it at the meeting on Thursday, the workshop. And there are things that I forget about. It's 476 slides. It's like a PowerPoint presentation. I don't remember everything, even though I try to review it as often as possible. The H pattern is discussed, but I have a glossary of terms going from A all the way to whatever the last letter is. I don't think I got a Z. But what is really important is that I discuss things here that aren't actually on the CD in terms of the chapters, because they are just bouts of information. There are pieces of information that pertain to the Chapman wave, like alphabet. I use alphabets sequentially higher, with uppercase levels going higher and lowercase going lower. Aborted rally, aborted rally is just that. But most importantly, in the Chapman wave, an aborted rally is when you don't get to D and it fails before that. So these things are all specific. Break up, break down, cluster formations, magnetic attractor. This goes back to 2005, I think, when I did the CD, 7 or 5, I can't remember. Modes, what is a mode? Phantom peaks, all these things are discussed. And a lot of them were in here because they were elaborated on in much greater detail as we moved on. Look at this. This is 8 pages or more. I can't even remember now how many pages of glossary terms. It's really a very comprehensive look at the markets. So it goes up to T and then U, W. W for W pattern or wedges waveform. V for volume. V-shaped bottoms. V-shaped bottom again. Oh, all right. And U-shaped patterns. So I thought I'd just mention that, and then that H pattern that we were talking about that turns into an M pattern. Now, what's really important is that the Roman candle on the last day of May had not broken 130.51. That is really important because it creates a scenario where gold, should I go to the I'm going to go to GCQ. I hope I updated that one. Yes, there it is. No, I didn't. Yes, I did on the daily. Now I'll have to go back to the GLD because it has the monthly charts. I don't have that. So the monthly chart has that Chapman wave right there. Roman candle. And if it goes into halfway into the wick, it invariably tests close to, exactly at, or just below the bottom of the wick and then bounces back. Well, it tested slightly above, and that's a positive. And it says what? It says there could be a rally here that tries to get back to the 142.81 level. Now, 139.50, then 142s, if this pattern is going to make a large arch formation.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. A couple of quick questions here. I had an email saying, what on earth would make you mess around with the NASDAQ biotech stocks when they had conferences going and all sorts of things, conventions going on, all sorts of things over the past a week or so. Let me go. But I also had a question about Merck. Merck has just been an incredible stock, and it's an incredible company. The previous high going from the low was down at 25.50. This is October of 2005. It runs all the way up into 2007, December. It goes to 61.62, pulls back to a lower low, and it's taken a great deal of time, a very concerted stair-step move to the upside. Now look at this. It is walking the 9-period exponential moving average. That is really important. The MACD is strong. The stochastic's only at 78%. I say only. There are two implications about that. One is a negative one, saying, oh, there's divergence, because if the stochastic turns down under 80% from this area, that should drag the price down. But when the MACD fast-moving average is good, I believe that it's very important at the same time to be considering, are new recovery highs being made? How far has it bounced above the 9-period exponential moving average? If I had to draw, just visually right now, if I had to draw something like this here, like that, and then say, okay, that's the upside of like a cup formation on the inside, which becomes resistance. How far is it away from all the different moving averages? Well, it is still reasonable. It is starting to accelerate a little bit because it's broken out in leg F/B in the monthly. But most importantly, what it does say is it's trying to get into that ugly bar from the January of 2008, and that 9-period moving average broke down right at 51.82, and it's trading right now at 49.21. I suspect that Merck has the chance to go a little higher, but it is becoming a little bit tired if I base it on other factors like the weekly chart. Also has a stochastic at 73%. MACD is good, but not as good as it was before. It's getting into this area that is a cup, and basically I have to consider that this is like a handle pattern, not the Chapman wave cup and ladle, but Chapman wave. No, just the old-fashioned cup and handle. That says, you know what, you can go a little higher, but you're bound to retest the handle area all the way down to the mid-40s. So that says, be a little careful here. Anybody getting in at this point with a gap up in leg E, I never like that. However, in the Chapman wave methodology, this is a cup and ladle, left side, right side, time, price breakout in a shorter period. The stochastics at 60%, and the MACD is turning up. But at the same time, it looks to me like it's news-driven, and it is news-driven. So I would say be a little careful here. If you're in it, you got a really good profit, and you're getting a little nervous, take a little bit off, and you plan to put that back, but don't plan to put it back quickly. Take a little time. Take 2 weeks, 3 weeks. Let it digest these gains. If it goes higher, that's fantastic. You've still got your core position. But I think there's every reason to believe that Merck is, in fact, getting a little tired on the upside and overstretched. That's number one. Number two is when I'm looking, and I spent, remember, a lot of time on this the other day, I spoke about the IBB. I said in the Chapman wave methodology, there's another technique that I use. This is the one that I use. In the I won't go there again. In the CD, it's the one that I use, a channel, and within the channel, I go to the outside border. I found this years ago when I used to hand chart, when I used to take my son skiing, and I would ski a couple of times and then say, it's too cold, not for me. I would love to ski if it was hot weather. Maybe I should try Colorado. But I would then go a couple of times with my son, and he'd be off to Black Diamond or whatever it was, and I would be off to the other kind of diamond down at the in the lodge, and sit there with all these books, these charts that I used to get. This was before the days of the computer, and I would sit there, and I sit in the lodge with a ruler, pencil, a pen and a pencil, and transparent rulers, and I would be drawing on all these different charts that daily graphs, I can't even remember. I used to send them. I used to be able to get them, and I'd be sitting there, and I found that in the channel itself, if you learned how to use these two trend lines and then add another two, the inside track where the price keeps being repelled or propelled, at some point it breaks either upside or downside. Then I learned to change the colors. These are all new innovations over the last year and a half or so where I've changed color. And the green says, hey, if you break on the upside, that's fantastic. On the red says, if you break on the downside, whoa. I'm looking at the IBB. If you're looking at, if you're right there on Tiger TV, you'll be looking at something right now that says, let me go there myself so I can see it. I want you to see it as clearly as possible. It says, be a little careful. Why? Because the channel has broken. Under every condition, the channel has broken. I'll be back. 877-927-6648. What a day to call. This is great. Very good opportunities, both sides.
The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit, and on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We're back. Basil Chapman, Tiger Technicians House. So the first question was Merck, and the other question was, how could I consider, with these fantastic biotech stocks soaring like this? There were 2 reasons. One is just purely technical, but the most important, and always look for this, it's really key. When you start to see secondary, tertiary, and then the very low-priced stocks in any sector start to kick in and start to produce 30, 40, even 50 and 60 and 100% gains in a very short while. That's the dregs being pulled up because people have missed the big ones and now they're going for the little ones, and they make fantastic gains. Those gains can be given away very quickly, but that is the sign to say the sector has run its course. Now look at this. IBB is trading at 173.36, down 6.14. There's the left side, right side price time match. That's the Chapman wave technique of looking at an arch formation. So I'm going to put LS here, and I'm going to put RS right here. RS. Now, what's very important about this is that within the technique that I'm looking at, there were these high-level pop-ups, and that's always very confusing. But if you learn to treat it, the technique that I like to look at is the right shoulder failure. The right arm extension, I always raise my arm, is exactly like that as you see in the den, or an IM, when you want to get someone's notice and it goes peeking, that's when you got the right arm moving up. That's the right arm extension occurs when you've got usually the fast moving average is moving higher, But the slow-moving average is starting to break down. So it's moving up with just one indicator helping, or sometimes MACD's pull back, and stochastic has a bounce. But it is going to fail, and when it fails pretty sharply. The other is when all the technical indicators, look at this, if I do a vertical line right here, here's a little lesson, a vertical line from the top, that was May the 14th, was it? 15th, 14th? May the 15th? At 186.98, if I put, let me make that dark so you can see what I'm doing here. Style, make it a single line, make it a little thicker, weight, make it a little thicker. There it is. Now look at this. Let's see if I can remove, doesn't it say repeat? No, I'll have to do the whole thing again. So let me do another one. Right there. Look at that. And then right there. Look at those. New high attempts. But look. At the technical indicators breaking down, I mean, that is a divergence of major proportions. And now look at this one here. I'm going to put this one in red, pink. There you are. Look at that. Can you see it well? Let me just quickly go to my chart. I want to see the charts just like you can see them. Right there. You can see it. It's a little faint. I'm going to make it bigger. Right there. So now, if you're looking at this style, single line, maybe make it nice and fat, weight, look at that. Look at that failure. And look at how it was over here. Let's call this green because it was so pretty. Look at that. It went to, it missed going to 186.98. It went to 186.40. That's only 58 cents. No big deal. Oh, yeah? Watch this. Look at the MACD. Look at the stochastic. Failure, failure, failure. But the on-balance volume said, don't be too hasty. There's still internal strength. That's why I waited and waited and waited. Now we'll see if it works out. You put in your numbers, you do your job, and you just wait for your turn. But most importantly, you've got the weekly chart making a peak E at right there at one. I can't put a down arrow yet. I can only put a plus sign because it needs to do a couple of things in the Chapman wave before I can go from a sell signal. It's almost close to a sell signal to a sell mode. If it goes to a sell mode, then the IBB trading at 173.75 should very quickly go to 169 and then 165, and the bottom of that candle is 163. That's kind of the area I'd be looking for, but this is most important. Look at the monthly chart. The tide is still up. The on-balance volume is at 92%. The MACD is very good. So that's where the question is great. How do you have the chutzpah the gumption to go short? I just did it purely on a technical basis based on the Chapman wave. The risk-reward, and the fact that I've got the left side price sign, I've got this Chapman wave inside wedge. Do you remember? This is the one that goes like I usually paint it pink with a dashed line, like that. And that's my target. That's called the target line, inside wedge target line. It says what? It says by the 10th of June, you should be testing that low bar there of 169.50. Will it be? I don't know. I'm just saying that's the methodology. We'll see if it works. So we've done that. Now I had another question. Excuse me. Let me just see. It just came in. Hold on. One second. Oh, yeah. Just an update. WFR wafer. A wafer is... Dude, I always remember that wafer is... wafer. Well, the symbol changed. I didn't realize that, but the symbol changed, and we'll see right now what it is. Look at the spectacular chart. I have to redo all the notation on Sun Edison. Oh, man, what was wafer called before? Anybody in the den? Wafer, WFR, a semiconductor, one of the fantastic semiconductor stocks from the previous generation when we went to the all-time highs right there. At 96.08, I think that's even pre-split back in December of 2007. Nobody, wafer, WFR, you must know what it is. Just a famous stock. Anyway, the issue now is that it's changed its symbol, and I would have been looking for it and wondered, what the heck? So, I just wanted to mention that. Oh, MEMC, that's right, MEMC. Thank you so much. That's Terry and the Dead. Memtech, I think, or something like that. I like the fact that it's changed its name. It's changed its name to Sun Edison Inc. Well, I guess it must have been taken over. Sun Edison Inc. was MEMC. Got it. Thank you. Okay, good. So now look at the SMHs, because Intel has had a fabulous day so far. See, this is a rotation. I believe this is a rotational correction. That's the reason we aren't getting the triple digit down. If we had a triple digit down right now, I would say we're in a bear phase. You know, I got this whole Hindenburg talk. I never dismiss any indicators, but I know that it's been there many times and we haven't got the Hindenburg. But if it does work out, that says that you're going to have at least 8%, but you could, in fact, have a much greater. You could even have a crash-type scenario. At this point, as long as there's a rotational market, that Intel can help the SMHs hold, that the SMHs can help the XLK, if it is. Yeah, the XLK, which has made a peak D top. This is the S&P Select Technology Spider Fund, made a peak D, but look, it's making that H pattern, the right shoulder failure pattern, and says, yep, it's going to be going down. If it breaks, I'll tell you right now, the left side of the H, right there's the H. Let me just draw it in so people can actually see what I'm talking about. Look, it looks like it's kind of a funny looking H, but a lowercase h. Just think lowercase h, that's all. Now look at that. If it breaks the left side low bar, by tomorrow, the next day, the quicker, the worse it is. But if it breaks 31.44 and closes underneath 31.25, it needs a few cents. It says, whoa, be careful. Look for the next doji on the left side. It's got that gap down at 31.14, 31.14 to 30.96 as the next level of some kind of support. But the monthly chart, I've had a tough time with this. I'm calling it G, but it really could... You know, there's even a chance this could be a peak A looking out. And if that's the case, you've got tremendous support in a rotational basis where the semis actually hold up really well. I've seen this before. Some of you might not have seen it, but if you've been in the market long enough, you'll know that there have been periods where the semiconductors, because as I was saying, when I was talking to my friend recently who has a semiconductor company, I said to him, why is it that so often my technical indicators are at a divergence? They're opposing what you often tell me about the meetings that you go, conventions that you go to, that the feeling is out there. I'm getting positive things and they're talking negative, and then suddenly I'm getting negative, they're talking positive. And then he said, because it takes so long, Applied Materials, if they want to build a new whatever, they're not talking about $100,000. They might not even talking about 100 million. It could be a huge amount of money that they have to prepare for. It's people. They've got to look for the site. They've got to look for tax advantages. Once they decide on it, that's just the first step. The next step is the implementation. By the time they get to it, they might say to themselves, "Oh my goodness, the cycle might be over." So, you can understand why that happens, so that when you do see good strength in Intel, a pretty serious contender in the semiconductor world, wasn't for a while, but I think it's coming back. Then you're going to say, okay, let's look at the SMHs. Well, the SMHs right now, in the monthly chart, and a question in the den, I've got this as brand new leg C. 39 round number high last month, and today it went to 38. 3 days ago it went to 38.87, and it's lower over the last two sessions. It only has a couple of cents, in fact, a quarter, 30 cents or something, to go to a recovery high in this entire month. I think it can do it, and that's the reason I want you to be so selective in shorting. I wanted the sectors that I thought had the best chance to hold up right now. I wanted the sectors on the short side, the ones that looked like they had the huge move. Now they need time on the downside. So now, when we're looking at entering any new buys, I would say you can be a little conservative here. If you miss it, fine, but I think you'll have another chance. Put in a price lower than you were last week, and just have patience for it to come to you. I don't think there's any need to rush right now. But look, you've got a market now back up 155 on the Dow, down 4 on the S&P, and look at Apple. Apple right now is down 6 at 443, and yet the QQQ Trust is still QQQ is acting pretty well. It was, not anymore. It was acting pretty well earlier this morning, but now it's at 72.60, down 65 cents. I guess, the impact of Intel is there. And it's got a leg D, a probable peak D in the monthly chart coming up this month, having just gone above the inside track. Remember I was talking about that? And a peak D made already in the weekly. Yeah, Qs could pull back. I think this is a time where you can look at the indices and you can say, hey, these indices are telling me something. Individual stocks might be telling you something else. And this is going to be really, really important. I'd say to subscribers, next 2 days, very important. Now let me show you something else. I think this is going to be fascinating. Here, this is my detailed work that I send out to subscribers every single day on the Dow. Look at this. The 120-minute chart. Oh, look at that. The 120-minute chart, let me just squeeze it. Right here, there are no technical indicators here. It's just the price. Have been making lower highs and lower lows in the Dow. But the VIX index has been making higher highs and higher lows. And VIXI right now is at 17.36, having hit 17.58. Even though the market by the Dow is up and the S&P is only down a little bit, I'm seeing something that's really important for the very first time. I'm seeing that the volatility index, remember how important it is, how long and how many times I talk about it, is in a strong leg, daily leg C up, and it'll make a leg D in the weekly chart above $18.20. Got to take that very seriously. I do not dismiss this one bit. And the monthly chart, I didn't see that. I meant to do it on the weekend and I didn't. I did everything else. The monthly chart had a close on. In fact, let me just double check. The week closed at 16.35 and the 9-period exponential moving average. Oh, can I get that? It's not there. I want to go to, what am I looking at? Click. There we go. Click. Nope, that's not going to do it. What am I supposed to do? Oh, there it is. The 9 EMA, does it give it? No, let's see on this side here, underneath. Okay, there it is. There it is. So, 9 EMA, price, time, MACD, 09 RSI, overbought, I don't see it. Oh, come on. I think it closed by my eye. It closed just a fraction above the 9-period moving average for the very first time since May a year ago. Isn't that interesting? I'm going to be watching the VIX index very closely. And what it's going to tell me is that the volatility index at any point in the next week and a half goes into the 20s. 20.09 is the 200-period exponential moving average. We could be seeing a short-term sell signal, which has just gone on Friday at the close to a sell mode in the daily Dow and the S&P, start to impact the weekly as a sell signal in the weekly is close to being upgraded, but at least you get a confirmation of a sell signal in the weekly charts. That's just the way I'm looking at it. At any point in the next 2 days, you just see the VIX close into the 15s, below 15 in fact, and this short-term sell-off is already mostly over, and we're looking more at time than price. I will be back. Basil Chapman, Tiger Technicians Hour, 877-927-6648. I'd love to take you. Oh, we've got Roy in Fort Worth. I'll be back. I'm sorry, Roy. I just didn't see it until we'll be right back with Roy in Fort Worth straight after this break.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, Then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tiger Technicians Hour. Dow's up 48, S&P's down 4, and we get to go to Roy in Fort Worth. Almost missed you. Hi Roy, how are you?
Morning, Basil. I'm doing good. I'm a new subscriber, and I was wondering what your thought was if tomorrow, being Tuesday, if they're going to go for 22 Tuesdays in a row, and if it might be a good opportunity to add to positions in DXD and SPXS.
Okay, here are a couple of questions. I like, first of all, thank you so much for subscribing. I do appreciate it, and I hope you're going to be very satisfied. Now, the most important aspect that I'd be looking at is, I don't believe tomorrow is going to be an up day for the first time on a Tuesday. But whether I believe it or not, and I could say that with a great deal of comfortability, because if I had to spin a coin, that's really different to the market. In the market, you're really not spinning a coin because it's human emotion. When you spin a coin, it's just a metal object that's going up and down, turns around and comes down. This says that in terms of human nature, there is absolutely going to be a down Tuesday at some point. But whereas on spinning a coin, you can keep doing that. It actually can go a lot longer than you thought. But I think we're running out of time. And the other thing, if it isn't up there, I think it's going to just be a very small update. The best case would be doji candle with a fractional up close, and then the next day is down. My suspicion is not fact. It is just suspicion. What I would rather say to you is, if I was looking at the SPY, let's just do it purely technically, since that's what I do. The SPY is now walking to the downside. The inside track dash line, if you're looking at my charts, you'll see that's the daily chart on the left. Mm-hmm. And in that particular instance, it held support today and it's trying to rally. If tomorrow the SPY, which is the S&P trading vehicle depository receipts, breaks under 162.17, it's at 162.99, and it should not be a problem if we are now if I'm correct in saying the tide on the daily chart has turned from a sell signal to a sell mode. You got the dreaded H failure pattern. It went down. The weekly chart is just beginning a turn down, so this is still early to even say, other than the fact that the MACD fast moving average is still good, and the stochastic is still at 83%, and it shows you how much it takes for a very strong stochastic to actually break down. When it went from the 90s just the other day, when the price was at 169 to today's low of 162, and that's a weekly chart, just 3 weeks. It takes a lot to break it down. Now, the question is, would you add to it? You know, we're talking high volatility in both cases. One's 200 times, one's 300 times. No, sorry, two times. Others, I mean percent. The others 3 times. So, in adding to it, if you are a trader who's traded these very frequently, then I would say to you, I'm going to give tomorrow certain parameters to look for anyone who's looking for certain support levels and for the next peak that should be made. So I don't want to do it now when we're only 2 hours, we're just over 2.5 hours into the first part of the trading day and the first part of the week, because I need to see the close, because we're talking about daily charts. I want to treat a daily chart on the close rather than intraday. But I know what you're saying, and I'm just going to say I would not get too exuberant. I would have said the word greedy, but I'm going to use the word exuberant. If these are working out and continue to work out, these are fantastic gains in the shortest period that you can expect. I would rather say be a tad more cautious, because there are still buyers out there and they can do anything. You saw today, the market theoretically should not be up. The Dow should not be up 48. It should be down a minimum of 60 points right now if this is one of those true sell modes. The rotational aspect is going to be important. So thank you for subscribing. Tomorrow I'll try to update and give you parameters, but I wouldn't get too carried away just because we've got real nice gains. The day is young. Let's see what happens. And thanks so much for subscribing, Roy. I appreciate that.
Okay, thank you, Basil. Have a good one.
Thank you very much. Folks, Basil Chapman, Dow's at 49 now. Stay tuned for Larry Pesavento. Of course, fabulous continuation of shows all the way through the day. And I appreciate you being here.